Good evening, everybody. This is Patrick Montesdeoca with the Equity Management Academy live trading room. This is a special weekend report for December the 1st, 2019. On this segment, what we're going to take a look at is the beginning of the trading session on Sunday night, December 1st, all the way through the remainder of the week. We're going to take a look at the VC PMI artificial intelligence, what it is telling us for the rest of the week, where the average price has been identified for the rest of the week, and where are the extremes above and below that average price. One of the things that you will see here in the live trading room is basically how I apply the VC PMI artificial intelligence in executing supply and demand levels, basically trading the average price and the extremes above and below that average price. When we're able to identify and identify the trigger points at the extremes above and below, it is the highest probability for you to execute a trade. We'll show you in a minute as we take a look at the information, the data that we are going to use for trading ourselves, our own account, for next week. We'll be back in a bit. If we take a look at the gold futures contract, trading last at 1466.80, down about $5.90. The market as of last week, after reaching the target that we anticipated of 1473, got up to about 1472.90, which was close enough to satisfy the completion of this pattern. And upon closing below 1473, it activated a short trigger, and we recommended our subscribers, our traders in our live trading room, basically to offset their position, their long positions, to go either hedge or to go short. Once the trigger was activated, it automatically activated the target below, and the target below is usually the mean from cell 1, and the first target was 1468. The second target is the weekly average price that we've been able to identify, which is 1467. So the market has come down after the short trigger activated on Friday, completed the targets of 1468 daily target and the weekly target of 1467. The fact that the market is trading now, as you can see, below 1467, it has activated a bearish trend momentum or sentiment. And what I suggest our trader subscribers basically is that when the price is trading at the mean or at the average price, it usually standard deviation 50-50. And as a self-directed trader, I recommend to take the highest probability trades, which is what I do. And that usually means the price coming down to the buy 1 or buy 2 level. In this case, you see the buy 1 level is at 1464. And if it doesn't activate a buy signal or trigger at that point, the next objective below is 1462. So we can clearly see that the price trading below the average has activated the targets below of the daily 1464 or 1462. At the same time, the reverse methodology of the artificial intelligence tells us that if the price closes above 1468 using the 15-minute bar, that it basically negates this bearish sentiment that we're in. And if a second close above it would activate a bullish trend momentum, which puts into place the sell 1 targets of 1478 to 1477. 1477 is the daily target, 1478 is the weekly target. And so as a self-directed trader, I let the market basically do what it wants to do, and when it activates the signal is when I usually will execute an order. But in the meantime, I have a structure on the daily and the weekly numbers, and basically the market is in a neutral zone right now with a bearish sentiment or bearish trend momentum. So either the market is going to close above 1467 or 68 and activate a bullish trend momentum, or it's going to come down to the buy one level of 1464 to 1462, which is the weekly numbers. If we do come down into these levels, it is the highest probability in terms of the mathematical application that we use, that if the price comes down the first time and activates the pivot level and closes above it, it would activate a short trigger, either from the buy one level or the buy one level on the weekly basis. So the harmonics of the daily and the weekly is 1464 to 1462 levels of demand. The distribution levels of supply basically are at the 1477 to 1478. The average price, once again, is 1468 to 1467.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.